Hello guys, and welcome back to the channel. So today we're gonna make a video about Palantir's highest stakes earnings yet and my take on it. So no doubt this is the highest stakes earnings ever for Palantir, because depending on what they report on Monday morning, which is just a few days away, now the stock could crash or continue to go to the moon. So of course I want to give you my thoughts, and in the end I'm going to give you what I think is going to happen and if you should sell now to be safe as a long-term investor. So the stakes are super high on this earnings, and that is because Palantir closed at $7.74 the last time there was earnings, and we are currently at 18.20, and that is 135% higher than last earnings. So for sure some of it was that Palantir was very overvalued and underappreciated going into this quarter, so some of that was an adjustment, but I do believe that the price is very stretched at this point. If Palantir doesn't knock the ball out of the stadium, it's not even just like hit a home run, like this earnings needs to like knock the ball out of the stadium, then the stock is probably going to go much lower than it is. And if Palantir reports great, you know, who knows what's the limit. I have even heard Jeremy Financial Education said that he thinks the stock could go to $27 if the report is good. I don't know about that. That seems very, very high, but for sure we would go higher than where we are. So what is the thing that would make the stock crash? So just reporting according to management guidance, I'm just gonna make me a little bit smaller, I believe would crash the stock, because management guided for 13% year-over-year growth, which is very, very bad growth for a company that has gone up 135%. And if there is no significant beat on revenue and no significant beat on earnings per share, investors are not going to like that, okay? If management doesn't increase the guidance for the year, so I have said many times that Palantir is not overvalued when the price was around $15, where many people were talking about selling the stock, and I said no, because if you make an intelligent guess, probably they are going to significantly increase their income and future revenues, and you have to adjust your model for that. But the $20, that's really even much higher, 25% higher or 30% higher than my $15 that I was okay with. And to justify that price, there needs to be a very, very significant increase in guidance, okay? And if there is not a significant increase or acceleration of new customers, that's also something that investors are not going to like. And one bonus thing, which I think it has like a 0% chance of happening, but if this quarter they're not GAAP profitable, we're gonna tumble like crazy, because investors are banking on the fact that we have two profitable GAAP profitable quarters in the bank, and we need this one and one more, and then we will be eligible for the S&P 500, and a lot of institutions are going to be buying. So if we are not GAAP profitable, watch out. The sky is going to fall down. So what would make the stock moon? So if there is a significant beat on revenue and EPS, obviously that's already showing, by the way, I don't think that this is going to happen, but and I'm going to go into it. Why? So that's already showing that they have such demand and such significant improvements that it's already showing in this quarter. So that would be a very, very good news. Significant number of new customers, because of Palantir's business model, you know that in the beginning they don't make a lot of money on customers, but they have a very good customer retention, so you know that there's a lot of money coming in the future. And if management then increases the guidance, like if they say something like we have had a lot of interest and we are running a lot of pilots with new customers, and therefore we can see that the next quarter we have to increase our guidance, that would be amazing. And a significant increase in the long-term management guidance, maybe even being back on this 30% per year. This is something that has disappeared. Very OG Palantir investors know that this was in every investor report, that's their guidance. They or that's their goal, to grow 30% per year. And this just happened to disappear a few earnings reports ago. And it never came back. If that would come back, that would be super good for the stock price. So what do I think the most likely outcome is if you put a gun to my head? I'm not going to give you exact numbers, but here is my prediction and my funny spelling. So I think they might have a light beat on revenue or EPS, but I'm not even sure that they're going to beat on revenue and EPS. And that's for the simple fact that Palantir takes a very long time to get money out of customers. And when Alex Karp made this statement when AIP came out that they have no pricing strategy, they're just going to take the whole market. So what this means to me is that they're focusing on getting a lot of new customers at very cheap, probably $1, like the NHS deal, maybe for free, or some very, very nominal amount of money, just to get their foot in the door, and so that they can prove to these customers how valuable Palantir software is, and then they're going to monetize on these customers later in the line. So that means that despite them doing fantastic, it's not going to show up in the revenue and the EPS numbers. So I'm very much expecting this, and I would be very surprised if there is a significant beat on revenue and EPS. However, I think there's going to be a significant number of new customers, because in the very few interviews that Karp gave this quarter, he has said that they are getting in 1 month the amount of calls that they were getting in previous years. Now, he didn't say how much of these customers they're closing, but normally if you know that you close 1 out of 10 customer and you have 10 times as many calls, then it's only logical that you're closing 10 times the amount of customers, maybe even more, because this time you don't have a pricing strategy and you just want your product out there. So maybe they are closing a lot more customers. So I think this is a very, very likely and very, very good outcome. And I think that management, because of this no pricing strategy, is going to give a wishy-washy guidance, like, yeah, we will do better than we think, but I don't know if they're going to give a very good straight increased income. I think it for many reasons. Palantir has a tendency to send back their guidance. They have a tendency to not communicate very well with Wall Street and not give them exactly what they want, although the last 2 quarters has been especially good on communication, but that has not been their strong point. So I wouldn't be surprised if they don't give a guidance that Wall Street is going to be happy with. And I think that all of these is going to result in the stock pulling back. And that would be a fantastic buying opportunity, especially if you see a significant increase in the amount of new customers, because then you, as a smart investor, and the people who watch this channel are very smart investors, you will know that there is money and there is acceleration and there is revenue coming down the line. And that is really the dip of a lifetime if you see this, that the customers are increasing and the stock goes, 20-30% down after earnings. It's the sell your farm, sell your wife, sell your kids kind of dip, and you just buy and never look back. So should you sell as a long-term investor? Because let's say they don't report very good numbers, or you just think that even if they report good numbers, the stock has really run up too much, and many people think this. I think that Palantir is overvalued at the moment. I know for a fact that Arnie is struggling with holding on to the shares because they are so overvalued. And what is my opinion on this? So my opinion is no, and hell no. So if you're a long-term investor and you're in this stock for the next 10, 15, 20 years, so I have to tell you a story. There was this guy, Jeremy Financial Education. I'm sure you know him if you're into YouTube finance. He sold Tesla at the peak when it was around $400. So he sold his highest conviction stock because it ran too much, and he didn't think that the stock was going anywhere in the next couple of years. And the funny thing is, he was right. And when he sold, he kind of looked like a genius, right? And then you have this other guy, Stephen Mark Ryan, who is like this uber Tesla bull. I'm also sure you know him if you watch this channel. So he was buying at that level, right? And he himself was saying that he thinks that the stock has run a lot, but because of the future value of where Tesla is going, he just keeps buying because he knows that it's a good buy, okay? So in the next 1 year after this, Tesla has gone 70% down. Jeremy, instead of buying one of his highest convictions, which is Tesla, he went and bought Tattooed Chef. He went and bought other startup companies, and almost every one of those bets failed him, and he was 70, 80, 90% down. Some companies even went bankrupt. Tattooed Chef went bankrupt, and I think he lost $1 million on it. Whereas Stephen Mark Ryan just kept buying and buying, and when Tesla was very, very low, I mean, kudos to Jeremy, because when Tesla was 100, even he started to buy Tesla again. And now we all know that Tesla is back to a 260 and 70 level. And the funny thing is, even though Jeremy was right at selling at the high price, because he went out of a stock that he knew, a stock that he knew was a sure bet, a stock that he knew everything about, he still ended up financially much worse because he was risking his money somewhere else where he didn't know, and it was a new bet. And in the end, Stephen Mark Ryan made much better money, and he was the investor that won out this battle, okay? And I want you to be the Stephen Mark Ryan in this situation, obviously, because you're a long-term investor, and that's the best decision for you. So if you are a Palantir OG and you have done hundreds of hours of research on this stock, and you know this stock, and you understand it, and you trust the management, and you know that this is going to be a multi-$100 billion company, even if this stock is going to chill out at $20 for the next year or the next 2 years, you're still better off holding it and just, making sure you increase your income, and, you buy the dips and you focus on your high conviction stocks. So that's my 2 cents about this. Good luck for everyone for the earnings, and of course I'll be covering the earnings, so see you at that time. Thank you so much for watching. Please make sure you're subscribed to the channel and follow me on Twitter, Vince is Bullish, and see you in the next video. Ciao, ciao.